Welcome to today's broadcast. My name is Colleen Patterson, and I'm the Director of Employer Services and Compliance at Savoy. It was just yesterday that I had said the funds under the Payroll Protection Program, or as we know, PPP program, are on a first-come, first-served basis. I had no idea that today's news from major media outlets would be about a statement made by the SBA as it relates to these funds. The statement on the homepage of the SBA website says, the SBA is currently unable to accept new applications for the Paycheck Protection Program based on available appropriations funding. Similarly, we are unable to enroll new PPP lenders at this time. So what comes next? As mentioned yesterday, lawmakers are working on legislation which would likely provide additional funding for small businesses. Discussions have included an additional $250 billion be added to the PPP program. And what we've been hearing and seeing is that analysts are predicting movement on the topic as early as next week. So time will certainly tell. In addition to discussions about adding funds to the PPP, lawmakers are also working on what is being referred to as Phase 4 legislation, or CARES Act number 2. It is likely to be several weeks before this actually becomes a reality, but it is in talks currently with our legislators. One thing is for sure, change is constant. We will continue to monitor this activity, and as we learn more information, we will certainly be sure to share that. Speaking of change, though, in light of today's news, reevaluating the current course that an employer is taking to seek assistance may warrant a change in your strategy. And here's why. The IRS recently released 68 new FAQs about leave-related tax credits for small and mid-sized businesses. Also available is the new form employers will use to access advances of new employer payroll tax credits due to COVID-19. As we had talked about before, that form is called Form 7200, which is labeled Advanced Payment of Employer Credits Due to COVID-19. We've talked before about how the Families First Coronavirus Response Act, or FFCRA, creates two types of temporary paid leave that qualified employees of businesses with fewer than 500 employees can access between April 1st through December 31st, 2020. What we also know is that federal policymakers don't want economically challenged businesses on the hook for these new requirements. So the law also created a refundable payroll tax credit to reimburse employers for 100% of affected employees' wages, applicable health insurance cost, and the employer's share of Medicare taxes attributable to the new emergency paid leave. So the question that's come up is, what pot of money do employers actually have to draw from? Eligible employers still have to rehold the employee's federal income tax and share of Social Security and Medicare taxes on any qualified leave wages. They also have to withhold all payroll-related taxes, and that includes employee and employer share from all employees that are not taking COVID-19 related paid leave. As stated in the instructions of this new Form 7200, businesses can draw from all of these sources of tax money that typically would need to be delivered to the IRS. Using that money, employers can pay themselves immediately for the costs they incur for paying employees and providing them with health benefits when they are out on COVID-19 paid leave. That's a pretty big pot of money for employers to draw from. So essentially, this means employers can access an employee's withheld income tax as well as their own payroll tax liabilities to fund their credit. The IRS FAQs clearly indicate that if businesses access other kinds of federal COVID-19 economic relief, and those are the programs such as Payroll Protection Program, the Employee Retention Tax Credit, or payroll tax deferrals to 2021 and even 2022, they can receive tax credits for qualified emergency paid leave wages too. Here's the bottom line. Employers cannot claim the same paid leave wage or health insurance cost for more than one tax credit or relief program. So that's really the catch. If an employer claims the employee retention tax credit, then they have to document that they are doing so for other qualified expenses. As for the COVID-19 SBA Loan Program, any qualified leave wages and group health plan costs related to a paid leave credit are not eligible as payroll costs for purposes of receiving or asking for loan forgiveness. So one thing you definitely want to make sure that you do is be sure to reach out to your tax advisors and discuss if the guidance in the recent IRS FAQs changes what your current strategy is. Just when we thought we could loosen our seatbelts and settle into our new normal, I think we all need to buckle up and get ready for yet another ride on the roller coaster. The thought of another ride could be scary, exciting, could be challenging for sure, and every other emotion that we've all been experiencing over the last several weeks to a month. But one thing is for certain, we are all on this ride together. As always, should you have any questions, please reach out to your dedicated Savoy team and continue to use the resources available in the COVID-19 section of our website at savoyassociates.com. From all of us at Savoy, stay healthy and safe. Thank you for joining us today.